Perfect.
All right, we're back with Gareth Soloway, Chief Market Strategist of In the Money Stocks. We got a little pre-market recording for you guys today on this Triple Witching Friday. Gareth, how you doing?
I'm doing well, Greg. Thanks for having me. Always great to chat with you.
Yeah, man, great discussions. I know the people love it. You're a fan favorite. And so let's jump in, man. What are you looking at today in traditional markets? I know it's a big day with Triple Witching. Can you kind of explain what that is a little bit real quick?
Yeah, so it's just a huge options expiration. You get multiple. I mean, like it says, triple witching, multiple options expirations in different asset classes. So essentially, what you have to look for is weird moves on these type of Fridays, and even the week. The week can be very weird, and then you throw in, we did see weird moves this week, wild swings in the market. After the Federal Reserve announcement, we saw the big pop. Then yesterday, the big drop, and then the futures are up this morning going into the day. So it's really jockeying for position, getting options or underlying contracts to be kind of at levels where institutions want them to be going into expiration. But the bottom line is, for investors, focus on the bigger macro, I think the bigger chart picture, and look to next week already.
Yeah. And I think I said triple witching. It's actually quadruple
Quad witching, yeah.
But yeah, and the other thing that's interesting too is, I've been showing how the last time the Fed raised rates, we had a little, pop rally on the day of the rate hike. And then for the next week, we sold off. And today the futures are up a little bit. So let's take a look at that and see what you're looking at in traditional markets here. And then we'll jump into Bitcoin and crypto.
Yeah, so taking a look at the SPY here, again, we are up about just under 1% or so on the S&P, I think just over 1% on the NASDAQ 100. And basically, I'm still thinking that, whether or not we get a bounce today, and by the way, on options expiration Friday, like today, you can see the futures up early and then they sell off by the end too. So, I mean, we don't really know where things will end out the weekend. But the bottom line is, I still think in the near term, meaning over the next week, we probably have to test this first level. You can see of all the levels along here, this is probably the first one where you start getting a pivot high and then also a little support chop right here. So I would say short term, 358, 359 area. It's not that much further lower. At this level, I think you do get at least multi-day bounce off of it. So again, who knows what today does, but I do think that we ultimately have more downside in the next week. We'll probably tag this level. Now, if we go lower, and eventually I think we do, even if we do get a bounce at the first level, you're looking at this one as being a major, major level. This is the pre-COVID high on the SPY, and that's at around 337 to 338. From there, I actually think the markets could start to see a sustainable, maybe multi-week bounce, maybe even a month or so. Almost remember what Bitcoin did? If we go to the Bitcoin chart, and I know we're not talking about Bitcoin just yet, but remember this period right here?
Yeah.
That's what I could envision in the equity markets off of that pre-COVID high, where you get multiple months of sideways to slightly up chop. And what that does is, think about the bearishness, right? So going into this period, there was so much bearishness in Bitcoin. And then every pop, you started to convince more and more people, higher highs, higher lows. And it was more of this kind of, wait, maybe we bottomed, maybe we, and that's weirdly enough what the market wants you to do. The market wants to get more people long before it flushes them out to the downside. And obviously we know Bitcoin did just that. So that's kind of what I'm envisioning for the S&P 500 off of this level, this pre-COVID level. So the bottom line is, I still think there's more downside in the equity markets, mainly because I think we are heading towards a recession later this year or 2023. Earnings estimates haven't even really come down yet. That's going to impact things as you get these downgrades coming out. And really at this point, the question is, how high does oil stay for how long? How much hurt does that put on retail customers and Americans and really global market participants?
Yeah, I think the deflation is just beginning. And, with that Fed soft landing, I kind of pointed out in the video the other day, this is what they're trying to do. Just keep easing it down softly, level to level, without, creating a major crash or structural crack somewhere, credit markets or something.
Yeah, no, I agree. And I think weirdly enough, I wouldn't be surprised if interest rates put in a short-term low, short-term high here. I wouldn't be surprised if the dollar is starting to put in a short-term high, which actually could give us, it could be the recipe why the markets are getting maybe a little bit lower of a move first and then maybe a bounce. And one of the things I was speculating on yesterday was that potentially Bitcoin maybe pierces 20,000, goes to 19.5, 19.2, 19.1, and then you could actually get a decent bounce there as well. And my thesis for that was actually based on the fact that if you look at the 10-year yield, right? Let's go to the 10-year yield. You actually have a weekly potential topping tail.
I'm not
right
seeing
here.
your chart.
Oh, sorry about that. Let me bring that up. So here we go. So this is the 10-year yield chart, right? And I do follow the 10-year yield because we know the bond market is massive, even compared to the stock market. It's way, way bigger. And you have to look at this. So you have this trend line that we just tagged this week at 3.5%. And you also have a topping tail on the weekly chart. So topping tails are bearish reversal signals. And again, when it occurs at a short-term high, and honestly, you have to go back quite a ways. I mean, you probably have to go back to here, which is 2011, to see the last time we were above this level on the 10-year. So that's a bearish signal. And we know if yields come in, it usually encourages risk taking because people are making less money in the bond market on interest. And therefore, again, it could be a reason why Bitcoin could get a bounce in this range, this 1920 range. And then also the DXY. Take a look at the DXY chart. There's this weekly channel, and look at where we are on the DXY. And also, again, I don't know if we'll sell today, but you could potentially have a doji here or maybe even a topping tail. But again, if this follows suit, and this channel has been around since 2015, I mean, that's a long time, 7 years inside of this channel where we've just gone up and down and up and down. Maybe the dollar is going to pull back, which we know would be good for gold, silver, and even in some respects, Bitcoin as well. So again, I am looking at Bitcoin, and I do think that there is a chance that, maybe it still has to pierce 20,000 because there's a lot of stops there. You have to run those stops and kind of get rid of those people, even though, it's just psychological at this point. But it wouldn't shock me to see a bounce back to 30 after we get to this 20-ish, which we kissed already, or maybe 19-ish area.
Yeah, and I know you've got a couple of new targets there on Bitcoin,
Yep.
That has a lot of historical confluence as well as technical confluence. I saw you on your recent video talking about that. And, that bear flag that you were talking about previously, I mean, that was a 2-month period where a lot of people thought we were getting a reversal back to new all-time highs. That, I'm wondering if we're going into a similar pattern now, maybe 30 days waiting for the next, Fed rate hike where, it kind of does the same thing, grinds it out, gets everybody super bullish, and then you get the Fed, hiking rates, and then bam, you get that next level down.
Yeah, and I agree with you. I think it'll be shorter this time. What we usually see psychologically from market participants is that once they've been fooled once, they'll see the bounce. Maybe some will jump on, but not as many. And therefore, when it rolls over, there just aren't as many buyers to support it. So I think you're right on that. Is that you could see a month, but unlikely it'll be the same length of time as the last one. And what we know about markets, and this is just something from studying charts, is that markets tend to like threes, right? So 3-bar surges before a chart pauses, things like that. And so what you can see here on the chart of Bitcoin is this was your initial move down. This is your secondary move down, right? And then maybe again, we get that sideways like this, and then you get your final flush out, whether it's to my 12,000 target, maybe it goes below, I'm not sure, but I'm relatively confident that we'll at least go below 20,000. How much lower? I think again, 12,000 could be it, but we would get that 3, 1, 2, kind of 3, and the final third is really the one where people throw up their hands. And I would just say this, is that you have a lot of pain in the crypto markets, but I wouldn't say people are giving up yet on Bitcoin, right? And that's one of the notes that I look for, is like when people finally throw up their hands and say, it's too much pain, I can't take it anymore. That's the bottom. Right now you have, oh my goodness, this is a lot of pain, but I still think it's going to go up, so I'm going to buy more, and that's usually not the bottom. So
Yeah, there is a narrative out there that this is the buy level, this is the generational buy level. And yeah, I don't think we've seen panic selling or capitulation yet. I looked at in a video yesterday, I pointed out what, March 2020 looked like, what, 2018 looked like, what, 2009 looked like, where we had that final panic capitulation in those markets. And yeah, I'm with you. We haven't seen that yet. We're not there yet. So let's look at that chart again on Bitcoin and take a look at, I think, are you looking at, with that measured move on that third leg? I mean, I guess that's almost like an Elliott wave five count down, right? AB, 1, 2, 3, 4, 5.
Yeah, you could definitely look at it as something like that as well, 100%. So there's lots of kind of things that are congruent at the 12,000 level. The first one is the measured move, this distance to this distance. If you map that same distance from here down, it gives you 12,000. So that would be that measured move. And then there are a few other things, right? 80 to 85 per correction in Bitcoin historically in its last cycles or its past bear markets. That puts you right around 12,000 as well. And then also, there's even some other things like this pivot right here, right at 12,000. And you can see this one was where we bottomed out in 2019. We had a first move up, pulled back, then it hit again and finally broke out. So that tells you there's a technical level there as well, not just a measured move, not just the 80, 85% correction. And then even to take it one step further here, and this is just, I love just playing around with charts, right? So one of the things that I like to do is what I call parallels. And basically, it's just finding a parallel line with another level that matches up. So one of the things here, if we go to parallels, you can see that you draw this line through here, which again, if you extend it down, this has been the line that right here, see these lows, and this is what we just broke recently, right? So you have pivot low here, 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 and here, and then we finally broke it. We'll extend that out more. Let's do an extension out even more. What about with these lows, right? So these lows right from here, 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 and here, and look at where that line is right now. It's kind of right around 12,000. Now, granted, it's going to slow down a little bit below by the time price probably gets there in a month, 2 months, or whatever. But I do think that parallels are very, very powerful in dictating price action where it's going to find support and resistance. So just an interesting thing how this line, again, parallel to here, which is this one parallel there to there. And then again, if you match it up with the next significant pivot area here, you get kind of that same area. So anyways,
hold that for a second. Yep. So if you extend the back of that line back to 2021 little peak before the drop, look at that.
Yeah, there you go.
That's interesting.
Right there. So again, that's the power of parallels. And again, I've started to use these in my trading more and more because I'm finding that they're more and more powerful. They really, and it's amazing because, this line is parallel with this midpoint here, which is parallel with here. And then and in all fairness, I would almost guarantee that at some point in the future, when we rally, you'll have resistance. If you connect here to this parallel, it'll be like resistance up here, wherever that line is at that point. So just very cool stuff with parallels in terms of trading.
Yeah, it's really interesting. And, right now, from a historical standpoint of Bitcoin, it's still really where it should be in a traditional 4-year cycle.
Yeah.
It reaches the peak every 4 years, corrects, goes into a 2-year bear market, starts its journey up. So, from the peak was, what was that? March, April of 2021. That's really the cycle top. Where are we now? We're about 18 months into it, I guess.
Yeah. And again, historically from the highs, it's usually around 12 to 18 months, how far into it, so we're getting there. My only issue is that, one of the things that I've been talking about a little bit is that this is the first cycle in Bitcoin bear cycle where you have high inflation, right? So starting in 2009, that's when it started. We didn't have high inflation, and this is the first period we do. And then also this is the first period where the Federal Reserve has actually stopped printing and is kind of reversing the printing press, is trying to suck money out. And so you just have to be a little careful here because it's really uncharted territory for cryptocurrencies as a whole. I love long-term crypto, at least the big players like Bitcoin and Ethereum. But I do think that this is the .com moment for cryptocurrencies. And I don't think that, maybe 5% of cryptos will survive this. But what that also tells me is we have to go lower because there's still way too many nonsense coins out there that really don't have a big use case.
Well, protocols, projects, everything, so yeah. And we're seeing, the systemic cracks and the contagion through the space as the chips start to fall, with each of these levels. And yeah, the stock market hasn't existed in an environment like this either. This is unique for everything. And I don't think since the .com bubble, we've had a bull market without Fed intervention, without some sort of support from the Fed and quantitative easing, stimulus, things like that.
You're 100% right. And it's actually a scary period because I do worry that this is uncharted territory, like you're saying, and it could spin us into something much, much worse later this decade. Because again, you get in this cycle of the Fed, when things get bad, politically, I mean, the Fed we know is not supposed to be political, but the bottom line is they're humans, they have hearts, they want to help people. So when they see people unemployed, and we know that's one of their mandates, they have to react. So if you start to see a recession and it gets to be a bad recession because of all the liquidity being sucked out and high inflation, if the Fed has to go back to printing of money, it just creates this cycle. And eventually that cycle does collapse. So you either get in Venezuelan type inflation, or you have to have this massive collapse and reset in the economy. And I do worry that the 100-year cycle of the 29 crash and the Great Depression is coming up. And I've said this before, but they always say that every generation has to experience something like that. And it makes a lot of sense. It's kind of like a reset for every generation. And a lot of those people that were in the Great Depression, there's not a lot of them left, unfortunately, to kind of remind us of the pitfalls. I still remember vividly my grandmother, they were relatively wealthy by the time they retired, but she still was into, so careful with money because she went through that period and remembered that period. And that's something just to kind of think about.
And food, my grandparents too, they kept food in the pantry. They remember when you could not get food. And man, it's pretty amazing times. And then you and I, and other people that have gone through 2009, I mean, we carry that with us, and we know, I mean, that was a long period before that recovered. Markets, real estate, everything. And to your point about the Fed, yes, I think where people are missing the disconnect, a lot of people, not everybody, but a lot of people out there are thinking the Fed's going to pause, they're going to pivot, they're going to rescue markets. They can't. And what the Fed understands is they have to destroy demand to a level where the labor market it's not healthy. There's still, a disconnect there that's got to be, fixed. The housing market is not healthy. There's a lot of people that are priced out of housing, and they said, hey, we're watching the housing market closely, meaning we got to bring prices down. We have to destroy demand so that people can get into housing, because, the good news of all this is once we get through this deleveraging, this deflation of assets and reset, then the Fed can step back in and stimulate again and drop interest rates and do all that. And then bam, we're off to the races again. But it's like the old saying, right? When the party stops, somebody's got to pay the band.
That's right. That's 100% right. And it makes me think of this, and I just brought this up. Let me show my screen here. But this is what the Fed is trying to do and how dangerous it is. Let me bear with me while I show my screen here. But you'll probably remember this game. I had this as a kid, right?
Yeah.
So basically the Fed is like, they're trying not to go too far, but if they go too far, they have to reverse, and they're going back and forth without falling into the hole. The hole's the Great Depression and the collapse, and they're trying to, which way do we push interest rates? Unemployment's this way, and then so it's like this game that they're playing, and it's, I mean, needless to say, I don't know if I ever completed this game without falling in the hole, right? So I mean, it just makes me think about that, and we all have to just be aware that this is a very dangerous time. It's not the time to be a cowboy and going all in on any one thing. You got to be careful.
Yeah, exactly. And especially with, Bitcoin and altcoins. I mean, historically, Bitcoin has drawn down 85% in a bullish Fed put environment, and altcoins drew down 95%. And most of the altcoins, including the total market cap, has a long way to go yet. I mean, still got 30% downside in most altcoins, major cap altcoins, and the altcoin total market, including Ethereum altogether.
Yeah, and I agree. And you have to wonder. I mean, this is where it gets really interesting, at least for me, as I'm trying to value altcoins, right? So you look at like a Cardano or a Polkadot or a Solana or an Avalanche, and you have to say, okay, well, if this was a company, what would it be valued at in the stock market based on its use case, right? And this is so hard to do. But again, would it be a multi-billion-dollar company, or would it be 100 million? And it's so hard to value these coins that again, that's one of the reasons why I'll trade the alts. But for the most part, man, when it comes to like where I'm going to accumulate for a longer term hold, I got to stick with Bitcoin as my main holding, and then maybe a little bit of Ethereum in there. But it's just too hard to know the real valuations here.
Well, how do you value a company that keeps issuing stock? So the problem with most of the altcoins is they're inflationary. They're not deflationary. Right. And I know ETH is trying to fix that when the move to proof of stake and all that. But that's the problem, is that they're not, you can't value them.
No, you can't. And I hope that, there's so many new investors that kind of came in with crypto, and crypto brought them in, the excitement of crypto. But I do hope that they understand some of these things. Because I remember when I started investing in small caps, and like, that was my beginning, trying to make lots of money on a small amount of money, just like a lot of people do. And man, did I get hammered so many times just doing bad things and not really understanding. So people need to really understand what they're investing in.
Yeah, yeah. Well, Garrett, I appreciate you taking some time out this morning. I'm going to get this out there for everybody before the markets open. And anything else you're looking at? You want to leave anybody with? Anything you got your eyes on?
I'm still liking a short on oil here. I know that's the counter kind of consensus thing out there, but I think that oil, to me, especially if the Fed's pushing us towards recession, it makes no sense that oil is going to go to 150 or 200. Even with Russia's disruption and everything like that. So I'm in the camp that oil is near term topping. I love the fact that the talking heads out there are so bullish. Everyone's saying, get in oil stocks. It's the safe place to be. And usually heck, they said that about Bitcoin at 65,000 with inflation coming. So just be aware of that. Go almost counter to what you're hearing, and you might be right more often.
Yeah, I showed the psychology of the Wall Street cheat sheet psychology of a market the other day, and it simplifies it with the waves, and it shows the most dangerous point in the markets right here, where everybody's bullish and hey, new all-time highs. That's the most dangerous point.
That's right.
I've seen it play out here in the last couple of really, since November.
It's amazing, man. Absolutely amazing. So I do thank you. It's wonderful to talk to you. We always have fantastic discussions, and yeah, man, let's do it again soon.
Yep, sounds good. Have a great weekend.
You too.